Hello, good morning, everyone. Good morning. Okay, so let me welcome us to our
Yeah, good
monthly
morning,
market
sir.
review.
Good
Today
morning. How
being
are you?
Thursday, the 26th day of June. A very cool day, good day. So this particular section promises to be very exciting, intriguing, if you like, life-changing type of analysis, the type that you get to understand what the market is doing. You get to know the direction the market is going. So among what we do, we give you tips and tricks on how you can navigate the market. While following us, while joining us, you can get trade direction. You can be able to tell what the market will do technically, even though also fundamentally. Okay. So before we start, my name is Emmanuel once again. So let's do a quick sound check here. I believe you guys can hear me. But faith without works. So let's add some work to it. Please get to the chat room and let me know if you can hear me.
I can hear you clearly, sir.
Chat room, you can just do I can hear you 1, 2, 3, 4%. That will be fine. Just even the first person, that will be good. Let me know if you guys can hear me. Please, you have friends and family that are in love with trading, that wants to trade, that are already trading.
We
You
can
can
hear
do
you
well to
clearly.
connect them, to let them know that they can equally join, fund their account with Rally Trade, and of course, start trading and doing well. Okay, please. From Mr. Chinedu here, he said, "Good morning, sir." Means which I simply means you can hear me, right? Chinedu, thank you
We
very
can hear
much.
you. We can hear you, Mr. Emmanuel.
We are just going to start right now. So we have enough time to do a lot of analysis here. We try to analyze the market and see the trade direction to take, the trade direction not to take, and also the waiting game. You know, waiting is also part of trading. Okay, Mr. Okay, patience there. Patience, I think you can hear me very well. Angelina, right? You can hear me. That's good. That's cool. I'm sure you are hearing me from different parts of the country, right? We have those from River State, those from Lagos, those from where is again? From Abuja, also those from Ibadan, so those from uh, Warriors, about different corner. Okay. So before we start, let's do a little rant here. Trading is such a beautiful game. Being that you can make good profits, but there are thorns on the way of making those good profits. So one thing you want to do is to protect your trade, right? So when you place a trade, always have a stop loss for your trade, right? So stop loss is used to protect your capital. So once you know that your capital is protected, then no risk again, no fear at all. So most persons always miss that part. Please, I'm trying to do a little rant before starting. Most persons always miss that part. Once you have a stop loss on your trade, a stop loss is AKA also known as small loss, right? So you protect your account. If this trade doesn't go in my direction, a very small amount, very small, it should be very, very small, such that if it doesn't go in your direction, then of course nothing bad, nothing spoiled. So, but if it goes in your direction, you make 2 times, 3 times, 4 times, even 5 times. That's what we call risk to return. So your risk to return ratio has to be very good, such that it always puts you, keep the odds in your favor. Even if you take 5 trades, you win 2, or you win 3, you lose 2, you are still going to have enough money, you are still going to have profit, okay? Because you're always risking less and making more. So that's one hack that you can deploy. So the norm in trading is most person will just enter a trade without even factoring in what their risk is on the trade. And maybe when the trade goes bad, that's when they will not start thinking, no, you don't do like that. So you trade like us. When you place a trade, you have an idea of what the stop loss would be, right? So enough of the rants now. Let's now start. So I was using that to get more persons in, okay? So the door is flung wide open for more traders to join us right now. So please do well and click. Don't be afraid of data. You make enough profit to cover that up. So guys, let me switch over to let me share my screen real quick. So let's start for fundamentals. So let's just look at some of the fundamentals that can affect the market. So I think that's our custom here. Let us look at fundamental. Then after that, we'll go straight to the charts, right? The chart, which means the language of the financial market. So the financial market actually has a language, and that language is the chart. So the chart is actually the language of financial markets, right? Do you know if the chart is the language of financial markets? If the chart is the language of financial markets, then can you guess maybe fundamental analysis is the dialect? It's the dialect. That sounds funny, right? So guys, I've been able to switch to share my screen. Check if you can see my screen right now. I'm showing Forest Factory right now. Check, check, check. Can you see my screen? Can you be able to see my screen? Okay, thank you very much, Immaculate there. So this is my screen, and this is Forest Factory, guys. So there are several websites you can use to check for the news, right? Or I can use to do fundamental. So I think this is good. This is a norm here. What you do is just go, for those of us joining us for the first time, just go straight to your browser. Then you type at the address bar www.forestfactory.com. You can also do investing.com. Let's check investing.com. Some of you have never ever gone to investing.com. So this is investing.com. So investing.com also have economic calendar, right? So you can get news also from it. So it's not only Forest Factory you can use. In fact, investing has more news, right? Covers more countries. So actually, these news are news from countries, right? And of course, the instrument we trade, be it commodity, be it indices, be it currency, they actually have their roots from countries. So we want to look at what's happening in those countries. I mean, the news, right? The macroeconomics data happening in those countries. So that is why we actually need to come here. So for example, this is the news now from Brazil. You can see, right? This is Brazil. So this is news from US, right? So it even have more news from the US from here. All right, but then this investing.com has a lot of what's it called? Adverts running around. So Forest Factor has little to no adverts, right? So for today being Thursday, the 26th, guys, what do we have here? We have by 12 p.m. today, BOE, Bank of England, right? Governor Bailey, this guy has been there for quite a while now. Governor Bailey speaks, right? Um, so traders normally follow through on their speech, right, and their public engagement to see if they can, while speaking, they can drop some clues, right, on the open market operations, on how the economy is doing, on what they intend to do concerning interest rates. So that is why whenever they have this public engagement like this, it's actually a news for traders, right, to follow through. Okay. So it's a speech, right? So it simply means we don't really know what is we don't really have the content of the speech, right? So that simply means trading fundamentals has there are two types of news, right? So number one is called data news. The number two is called non-data news. Okay. So this speech belongs to the non-data news. Non-data news. Non-data news. That simply means on the website we have the area for data. So this part is the area for data. So we have the previous data, forecast data, the actual data. But you can see on this one there is no data at all. Let's jump to the next one. You on the next one we have final GDP quarter by quarter. Okay. So GDP tries to measure the overall health of the US economy. Okay. So we want to look at the overall health of the US economy. It also measures the total value of goods and services, right? Purchased, produced in that economy. So this one now is quarter by quarter. If you notice, this particular one has data, right? But this first one does not have data. Data and non-data news. So which of them is the best to trade, right? The best, now you can trade the two of them, but the best is actually the one that has data so that you can see for yourself to know when the news is a good news for the economy, to know when it comes out as a bad. For example, for employment data, if employment is good, better than the previous month, it's a good news, right? So that means the currency value will appreciate, right? So you buy, So, but if the news comes out bad, the currency value will depreciate. So you do what? So you sell. So you say that's how it works. Okay. Now, then the next one we have, but for this speech, we don't have such data. Okay. So it simply means when the news is released, you stay glued to your chart at this particular time. I mean, you stay glued to your chart at this particular time. When the news is released, so what you need to do is you look at the direction the price is going. And of course, you can take a trade in that direction, as simple as that. You can take a trade in that direction. But then, of course, by 1:30 p.m. again, we have unemployment claims as usual, once in every week, right? We have these unemployment claims, measure total number of persons filing for unemployment benefits in the US, okay? Unemployment benefit, that simply means it measures those that are unemployed, right? Or those that are not gainfully employed that still need some stipends from the government, okay? Okay, just like we do in Nigeria. Okay, does unemployed graduate have any stipends from Nigeria? Okay, guys, then of course we have durable goods, all of that. Now, if you notice, our focus is on the major one, okay? On the major one. So we have FOMC here also by 1:45 p.m. But then it is termed as a low volatility news, right? The yellow are the low volatility. FOMC means Federal Open Market Committee. They are the body of members charged with open market operations. They discuss how the economy is going in the US. Okay, so they are made up of board of governors and all of that. So this is FOMC member Barry King. Barry King speaks, right? Speaks. FOMC member Dali speaks. So it depends on what the speech is also. That means it's also a speech, right? They will have pending homes as then of course by 7:30 p.m. we have the ECB, European Central Bank President Lagarde speaks. Okay, that's 7 p.m. So the onus is on you as a trader, right? To stay close to your chart and your trade whenever we have news, right? Only that time, right? To see the direction the price going. And of course, if you have a trade already, you have stop loss on your trade, you have take profit on your trade. Make sure you always have stop loss and take profit. So enough of the fundamental. So that means from now, so nothing happens, no high volatility for now, following the calendar news till when? Till 12 p.m. Okay? Till 12
Coach, what happened? There's no picture again. Hello, sir. We can't hear you anymore.
Maybe it's network problem.
Maybe it's network.
He's not online. Let's
We
give
can
him
hear
time. He's not online. Let's give him time to come back. Maybe he has network.
Okay.
So guys, we are back right now. Sorry for that glitch. Let's continue. It was a problem from the internet, so that's been restored right now. So can we continue? Please, can you hear me? Those who are joining us, this is our morning market review. My name is Emmanuel. So we're analyzing the chart right now. Let me share my screen with you guys. So I've been able to share my screen. Please indicate if you can see my screen. Can you see my screen? Please get to the chat room right now. Let me know if you can see my screen real quick. Just type, okay, now type chat if you can see my screen. Just type chat. Type chat. Can you see my screen? So I'm waiting for you to type chat. Get to the chat room, just type chat. So you're not typing chat, so I believe you can see my screen, right? So let's start this analysis with, okay. I think I'm getting something from a Mark Lay. Thank you there, chat, okay. Now let's start from USD index. Let's see what is happening to our precious dollar there. So dollar is trading around 99 right now, 99.338, right? Okay. So let me start from Euro USD rather. So Control M there, Euro USD. So guys, this is chart for Euro USD. So the kind of analysis we do is called market structure analysis. And I call that analysis the language of financial markets, market structure analysis. So let me drop down, let me drop down to daily time frame. Let's see what the market is doing in the daily time. So on the daily time frame, so this is the daily time frame, guys. So even on the daily time frame, what can we see here? We can see a very powerful upward momentum, right? Now, apart from that, within the last, it's actually moved, right? Within the last 1 week, within the last 1 week, we have all been seeing all bullish candlestick, as you can see, right? So if you are a long-term trader, it simply means this trend is actually a very strong upward trend, right? A strong upward trend. That's now this for the daily time frame. Now let's drop down a little bit to 4 hours time frame, right? So even on 4 hours is a beautiful upward trend, right? Beautiful upward trend, as you can see. First week, second week, third week, fourth week, fifth week, beautiful upward trend. We got a retracement right here. And of course, it's going upward. So how do we define an upward trend? The market keep breaking structures to the upside, right? So the market keep tapping the protected, the target liquidity. So the target liquidities are the liquidities above the highs. So the protected liquidity are the liquidity below the lows. So we have target liquidity and protected liquidity. So another way you define an upward trend is the market is breaking or tapping the target liquidity. So that means we have traded above this high. We call that a break of structure. So once we have a break of structure, the market have traded above a high, a notable high. So this is retracement to the downside. This is an impulsive move to the upside. This is a retracement again to the downside. So you notice this is now the high. So the market has taken out this high and is forming a new high. So this is actually an upward trend. So now we're doing this on the H4 time frame. So on the lower time frame, 1 hour, is it still an upward trend? Of course, the answer will be yes, right? The answer will be yes. On the 30 minutes time frame, it's now upward trend, so it is going up. Do you know if you only trade the trend, it means 60 to 80% of the time you'll be making profits. If you only look for the trend and trade the direction of the trend. Trade the direction of the trend. So that means once the trend is up, you look for opportunities to buy. No, trading is a discipline. You discipline yourself that way. Once the trend is up, look for opportunities to buy. Now, sometimes you buy and then you be on negative, you be on the drawdown. Now, even if you're on the drawdown, there is still hope for the trade to turn in your favor. So let's assume you bought somewhere here and it moved up. Of course, that's profit. Let's say you're not there to take the profit and it moved down. Come on. Now, if you're self-efficient enough, it can still move up and still give you profit as long as it has not got into your stop loss. So you can see that now, right? So that being said, this is a very powerful upward trend. So for an upward trend, we are looking for an opportunity to buy. An opportunity to buy. Don't forget opportunity to buy. So what are the opportunities to buy? Opportunities to buy is to buy on a support. Right? On an upward trend, opportunities to buy. No, trading is not done haphazardly. So the first thing is, are we on a trend? If no, then you want to leave it. If you're on a trend, beautiful. What kind of trend? Downward trend, upward trend. Upward trend, beautiful. Now, where are the opportunities to buy? You will believe me that when this market move up from here, let me zoom in very well. Okay. when this price move up to this point, when this price move up from here to this point, right? When it did something like this, from this low to this high, then it retraced like this, then from this low again to this high. Now, this low automatically becomes a support. This particular low automatically becomes a support, right? So the next time it gets to that support, so this is where the buy is supposed to come in. Opportunities to buy, opportunities to buy. So when it retraces to this level, this is where the buy is supposed to come. So you buy here. When you buy here, you should have gotten for yourself this amount of profit, which is how many pips now? Man, you should have gotten around 42 pips, right? So when you trade medium volume, I mean the mini volume, $1 per pip, that's $42. Man, $42, that's good. Let's say your capital is just 200,000 naira. But if your capital is 1 million naira, 500,000 naira, and you trade $10 per pip, you trade $10 per pip, this 42 pips now should be giving you around $420. Man, $420, you mean just this money? Yes. So trading is sweet when you have bigger capital, you can take bigger risks, bigger volume. Okay. So now that it has passed, because that will be the next thing in our mind. Emmanuel, now that it has passed, what else can I do? Right? I don't know whether you have that in your mind too. Now that it has passed, what else can I do? It is still a buying. Price established is a support. So if the price comes around here, I would still want to buy. But then it's good to establish more levels of support. More levels of support. So this equally is a level of support. So it's good to establish more levels of support, right? So you have, so as a trader, what one thing you want to do is you open your chart, you identify the trend, then you establish the levels where you can buy or sell. Those levels are actually support for the buy, resistance for the sell. That means if the trend is actually a downward trend. So trade is very simple. So this level is also qualifies to be a support. Now this other level taken from behind is also qualified to be a support. So do a quick one. Take a screenshot of this right now. Take a screenshot of this right now. It simply means for today, if the market dropped to this level, these are levels I would want to buy for. So for those of us scalping, please have you taken a screenshot? For those of us scalping, these are levels that you want to buy at. Eh? So that means you can stack your trade. Stacking your trade means taking different levels, taking trade at these different levels. Take one trade here, take another one here, maybe 0.05, 0.08, 0.1, 0.15. You stack it such that once it moves up, then of course, make sure you have stop losses on this trade also, okay? So that being said, for Euro USD, our direction is a buy signal, but then we are looking out for support. So I think we are done for you with Euro USD. Let's move over to the next instrument. So if you have questions, please get to the chat room, ask some questions there, drop your questions, then of course I'll take all of them at once. So as I'm analyzing this instrument, I'm looking at the chat room so I can take your question, guys. Now the next one we're going to analyze. So if you have instrument also, let's stay with currency pair for now. So if you have instrument also that you want us to analyze, please drop it on the comment section. Now, if you're already on the trade, right? If you're already on the trade and you want us to look at the trade also, drop it on the comment section also. If that trade is going well for you, profit, it's not going well for you, you're having a drawdown, drop it on the comment section. Solution is here. Once we beam the light onto it now, you know whether you have to wait, know whether you have to quit, all of that stuff. So we have done Euro USD. Now let me also do GBP USD. So for GBP USD real quick, let's do also the daily time frame and see what the chart is saying. So the daily time frame, GBUSD is trading at 1.37233, man. That's a very good high, man. That's gone high, right? I think that's the highest we have seen for this year, right? Man, that's the highest we have seen for this year, right? 1.37, 1.37. So that means it may just touch 1.4. Wow. So that simply means there's not much analysis on it now. It simply means we are on an upward trend, right? Even if you look at the last few days, 4 days ago, all bullish candlestick, right? All bullish. It's blazing high, man. So let's drop down from daily time frame to H4 time frame. It's still going up, guys. From H4 time frame to 1 hour, 1 hour to 30 minutes, 30 minutes, man. The thing is just going up, man. So it simply means since it's an upward trend, all the time frame all align. Come on, guys. No, the time frame are actually for detail. I mean the lower time frame, right? So the lower time frame gives you detail of the higher time frame. For example, 15 minutes time frame is the detail of 1 hour time frame. 30 minutes time frame is detail of 4 hours time frame. So they are detail. That means it's the same direction, but then it's in more detail. So guys, same thing here. So trader, same thing here. Since it's an upward trend, one thing you want to do is, this is what we call a trend line. The market is beautifully running from this trend line. But this trend line is very steep. So that means the market would need some breather. The market would need to take out some of these lows, to tap some protected liquidity, gather momentum to push higher. So the trend is still upward. So what you want to do is you want to look out for support levels, right? The support level are areas where momentum is high for the market to pick up again and then start running upward again. So these levels are actually called support levels. So these levels are support levels. So just like we did on Euro USD, now just imagine doing something like this on the chart. Anytime the price gets there, you can hit it hard. So if you notice, the market has broken this structure. So let me draw it for you. This is a high, traded above this high to form a new high. This is retracement, right, to this low. So this is movement upward again, traded above this high to form a new high. So this is upward movement, upward momentum. The market is running up. So what do? We look out for buy signals only. So buy signals are actually on the support, okay? So all of these supports are areas where we can buy. All of these supports are areas where we can buy. So now the closest one is this one. You want to wait until the price gets here, right? You want to wait, right? So waiting is trading. So I'm giving you one signal, the second signal for today. You wait until the price gets here before you buy. So when you buy here, if you don't have big capital like that, if you want to use this place as your stop loss, below this low as your stop loss, then of course you take profit times 2 of that distance. So see what I mean? You wait until the price gets to this level, right? Okay. When you do analysis and the analysis comes out that you wait, then appreciate it. Why? Because you're waiting for in the area of the highest momentum, right? Because in trading, when you chase the market, you may not do well. When you hunt the market, you do well. When you chase the market, chasing the market means opening the chart and placing it in the middle. No. Open the chart, you do analysis. Oh, these are areas where the momentum will be very high for me to take my trade, right? That means there will be some kind of waiting. So you wait until the price gets to this level, you enter your trade. And of course, stop loss has to be just below this low, very tight stop loss. Then times 2 of this distance times 3. So this times 2, this times 3, that's times 1, this times 2, right? So minimum times 2 of that distance as you take profits. So you wait until the price gets here, you place a buy, you put stop loss, and you put a take profit also, okay? And that will be analysis for GBP USD. So let's look at the comment section right now. Okay, Mr. Eddie, you want us to analyze Euro JPY. So now let's move to Euro JPY. So Euro JPY. So Euro JPY, so this is Euro JPY. Yeah. Now I already have a trade on Euro JPY, right? And I have a trade on Euro JPY. So a powerful upward trend. Eddie, you say you have a trade there. I equally have a trade, right? But the trade right now is moved from profit zone to the red zone. So Control Y, zoom in. So this is a very, very powerful upward trend. So if you're buying Euro JPY, you're not wrong. Not wrong, right? You're not wrong. Why? You are actually trading the trend. You're trading the trend. So trading the trend is the easiest and the simplest way to go about trading, right? So you look out for the trend, pick your trade following that direction. So quickly, let's zoom to the area and find out what is happening here. So the market was able to take out this low. So the market created this high for us, then of course did a retracement, right? So retracement is very important for the market to gather more momentum. So the market took out this high to form a new high, right? The market trading above this high to form a new high is a sign of momentum to the upside, because that is the definition of an upward trend. So a retracement to the downside, right? Fail to trade lower than this low, which is ideal, right? It's ended here. Then of course this movement upward now is supposed to trade above this high, but see where it stopped, right? So since it stopped here, we can do something like this. These two high, are they close? Do they look alike? Something like this. So in trading, these two highs that look close, we call that relatively equal highs, right? Relatively equal high, because this low has not been violated. So if you have a buy, just like I have on Euro JPY, right? And then of course you have a stop loss, you're not wrong. If you notice, let me zoom in. If you notice, this buy had already shown some kind of profit, right? But then take profit up there, of course. So I didn't mean this trade has taken out this high already and it's somewhere around there, then I would have adjusted my stop loss to protect some of this profit. Because taking out this high, we call it break of structure. So once the market breaks structure, then of course then it can retrace at any time. So once you're on a trade and the market breaks structure, so what you need to do is to quickly adjust your take off your stop loss to protect the already existing profit. Then if it goes up, fine and good, hit your take profit. If it comes down, it's coming down to hit the stop loss that is already protecting your profit. Please, am I communicating? Are you guys getting value? So if you are on a buy trade, beautiful, you have your stop loss, the market has not violated any low, so we are still on an upward trend, right? So this is the low the market needs to violate for us to start saying, hey, it looks like this market is about to go down, okay? So in other words, the market is even printing and of course offering some discount for more traders to enter. So if I were you, I would be looking out for opportunities to buy on, until the market takes out this low. So all of these areas are still opportunities to buy. So if you have some more instruments you want us to analyze, so please drop it at the comment section. Let's stay with a currency pair for now before later we can go out of currency pair, look at commodities and the rest. But for now, let's stay with currency pair before we get into indices and all of that. So these are areas where you can buy, right? These are areas where you can buy. What about right now? Can you buy right now? Now you shouldn't buy immediately because you cannot see red candlestick printing first, second, third, fourth, and you want to buy. No, you don't do that, right? So the market will show you signs first that it's about to turn and start going upward. By that I mean you first see the first bullish candlestick. So if the market prints a bullish candlestick here, they want to think about buying, right? That bullish candlestick should be big enough to cover the red candlestick, right? So, but for now, you don't want to buy, but this is an area, a potential area where the market can start printing bullish candlestick for you to think about buying, okay? Remember, we are doing this because the overall trend is an upward trend. Don't forget, you can see my screen. The overall trend is an upward trend. It's just like when we had all of this dip, right? So all of these, I call them dip. When the market dipped this much, move up. When it dips, so anytime it dip like that, remember it is offering discount for traders who want to continue the already existing trend, right? So that's for you, Eddie, there. So, Mr. Ekpemski, you said the last trade information I gave on Euro JPY, you made a profit. Okay, okay, thank you very much. You made a profit. That's good, Ekpemski. I hope the rest of us equally made some profit on that trade, right? Okay, okay, that's good. That's good. It is our joy that you make profit, right? So that you can continue trading forever. So that rally trade can be your broker forever. So, Ekpemski, one thing I would like you to do for me, make sure you get across to your friends that are not trading, as you're making profit. Get across to them. They can start with as low as, if they don't have enough capital, you can start with as low as our silver package, which is 200,000 naira, right? Or they can do $1 million naira. So that as you're making profits, you too, you're equally making profit, so that it will reduce all of those urgent 2K, urgent 5K. So let's go through them. Also, Mr. Engineer, you said we should do US 100. Okay, I said let's stay with currency pair for now. So I have a trade equally on a US 100. Let me check. I have a trade equally on US 100. As you can see, there's a trade here already. But then let's stay with currency pair for now. Okay. John, you said let's do AUD-JPY, okay? AUD-JPY. So we have done Euro-USD, we have done GBP-USD, then on request, we have done Euro-JPY, and now you say we should do AUD what? Did I get that right? AUD-JPY. So quickly, change my screen right now to AUD-JPY so that you can get value from it, okay? Oh my goodness. So, Mr. Is that Emmanuel? Let me see. Mr. John, okay, fine. So this is AUD-JPY. Do you have a trade here already, or you are just in love with AUD-JPY? So let's use this blank one and analyze so that to be clear enough, big enough. So let's drop down to, let's see daily time frame and see what it's showing us right here. So on the daily time frame, pretty much a little bit confusing, right? But if you start from here, you notice that this is an upward movement, right? Okay, so on the H4 time frame, same thing there. H1 time frame. So let's zoom into it. So Control Y to have them in days. So zoom into the area so that we can see what is happening. So if you zoom into the area very closely, you will see that the market has been respecting this low, right? Right? They respect this low, this low, this low, this low, this low. So if market is respecting that low, what you want to do, you just pick your rectangle. You can actually draw rectangle using your phone, okay? So by the time you start drawing all of this is on your phone, it makes you see the chart. The chart looks easier. So it means for some days, even up to a week plus, the market has been respecting this area, right? Has been bouncing up this area. That suggests that this falling sword or falling hammer or falling knife, this falling knife now may get to this level and respect it, right? So that's for the low there. Then what about the high? Now, you notice we can draw the same thing for the highs. We call it relatively equal highs, right? We can draw the same thing for the highs and position it very well. So these are relatively equal highs too, right? So it simply means we can say Euro-JPY has been going through what we call a range, right? So we can call this a ranging market. So ranging markets are quite simple to trade. It means the market is bouncing off the up and the down part, right? So you notice it has bounced up this level. So if we have seen this before now, around this level, we'll be looking out for a sell opportunity. And sell opportunity will be occasioned by what we call a change of character. The market trading below the recent low, that you can now start selling. But right now, the market has already dived deep, right? So If you enter sell, you will not be wrong. It means, but your take profit will not be far, right? If you enter sell right now, you will not be wrong. Your take profit will not be far. So your take profit will just be around 15 pips, because this level, right, is a level that the market will have to respect, right? So it simply means you want to wait, right? So these are what you will likely do. This is what you should do. So number one, if this price did not fall immediately to this level, if it retraces to this level, then you enter a sell around this level, because this level will not serve as a local resistance, right? So if listen to this if statement, if it did not fall straight to this level, if it retraces to this level, enter a sell around there. If you do that, then you have an opportunity of making up to 37 to 40 pips, which is a good one, right? So your sell trade will start somewhere around this level. But if it falls straight to this level, then of course, on this level, you look at for buy opportunities. So Mr. John, I'm sure you were able to grab this one. So it simply means on this particular level, we are only going to be buying and selling this range until the market violates the low or the high. So I mean, until the market is able to smash to it, something like this, smash to it, right? Then, of course, a retracement again to test the support turn resistance. Of course, you know what I mean. Support turn resistance. Then now look out for sell opportunities. But for now, we are still thinking about selling, right? So if you are the type that, hey, I want to take small as 10 pips profit, you may still want to enter sell. So you may want to enter sell right now immediately, right? Because for this level will still be your take profit. So it's a sell condition, sell market, sell opportunity. So two ways to enter the sell, either immediately or you wait for the market to come up. Now, even if you enter immediately, let's say 0.05 somewhere here, right? Even if it trace against you, you may still want to enter more, right? Because it has to test this level before bouncing up again. So guys, that's the analysis for AUDJPY. I'm sure you got value from them, Mr. John. So USD card, Mr. Alebode Isedu. Sorry, I hope I don't murder your name. But let me just say Ale, Mr. Ale. How are you now? So USD card. I also have a trade on USD card. Let me open it right here. So also this one, the same thing with the one I have on EuroJPY. This one also gave some profits, sorry, this was the profit gave, right? It gave some profit, but did not get to my take profit, right? Or did not trade above the recent high. So that's how I trade, right? So if I'm on profit, I may not protect the profit immediately until it breaks the recent high or recent low. Even though it has not gotten to the take profit, but if it breaks the recent high, I know that, hey, we have done break of structure here. I start calling everybody everywhere. And, hey, you can see the market has done break of structure. And after the break of structure, we're expecting the market to retrace. So you start protecting your partials. By that, I mean, you start protecting some profits already. Why? The market may want to retrace. Remember, most of what we do is day trading, right? It's day trading. It's day trading. Okay, so now you can see I have a stop loss here, but one thing I'm not afraid of is that remember this level is a very strong support. Now for you, Mr. Lay, right? You that want to analyze this one, look carefully. What kind of trend is this? This is an upward trend. Why? From what we can see right here, from days ago, we keep breaking structures, right? We keep breaking structures to the upside, breaking structures to the upside. This is a tap. This low right here. This low right here actually took out the liquidity resting below this particular low. But if you notice, it did not close below it, right? So this is what we call a stop hunt. A stop hunt. So that means this market is actually will strongly move up again. Why? Because we have tapped the protected liquidity, right? The market have tapped protected liquidity with what we call a stop hunt. So this level is actually a support. So if you notice, the stop loss is actually hiding below the support. So this line I'm doing right now is our support level, right? It's our support level. So even you too, you may want to pick a buy signal around there, right? Take a buy signal, a buy trade, right? Around there. So the market is ripe for a buy trade, guys. Or you may want to wait until now. I already have my buy up here, right? or you may want to wait until it falls and touch this level before you buy, right? Until it falls and touch this level before you buy. But then it's going to it's a buy, it's a buy. It's a buy. Why? We are only trading the trend. Remember, the kind of trade we do here is just the trend. You can trade what you anticipate, you can trade what you saw in your dream. Just like dreaming, hey, you should go and sell. You can trade that. But the kind of analysis we do here is we analyze what we see on the chart, and most of the time, 60, 70 to 80% of the time, you'll be right, you'll be correct, you're correct. Because if you do what we call back testing, you can see that it has always been correct up to 60, 70 to 80% of the time. And in trading, we don't need to make profit 100% of the time. Making profit 60, 70 to 80% of the time, and having a good risk to return ratio, I mean, your profit target is always bigger than your risk, or your profit is always bigger than your risk. And of course, at the end of the day, it puts you in what we call net profit, guys. And net profit is always sweet, guys. So, guys, you understand that right here, right? Okay. So, for Mr. Ise now, we are actually going to look out for a buy opportunity. So it's still a buy opportunity. You want to buy on all of these supports, right? But if you look at the current candle forming right now, it's a bearish candlestick. Just like I told you, you will not buy when the candlestick is currently showing red, right? Because the candlesticks are for confirmation. So once you see a bullish candlestick on my own screen, it will not be what's called now a blue candlestick. Once you see a blue candlestick, it is now a confirmation that hey, that level is actually holding the price. It's holding the price, stopping it from going down lower. So that's where you can start loading in your buys. Okay. But for now, you want to wait until you start seeing that kind of confirmation, okay? Now, you remember waiting like this helps to help you to enter the trade at the best time, the best possible price, and also waiting helps to prevent you from taking wrong trade. Waiting has a lot of benefits. Okay, that's for you, Mr. Ise. The rest of us, I hope we are getting value from this. I'm just going through them one after the other. So Mr. Precious, he said, let's do USD CHF. Okay, do you have a trade there? Do you have a trade there? USD CHF. Now, this is the USD. This is the USD, the Euro USD we analyzed, right? We're waiting for it to drop down to this level. It does not drop, it does not going up again. So that means we are still waiting, right? We are still waiting, except you want to go to 1 minute time frame or 5 minutes time frame and start looking out for very small, tiny levels of support just to join, right? So the more you go down the time frame, the more you see more detail, and those details include more levels of support and resistance. Don't forget that. So you say USD CHF, right? So USD CHF. So real quick, Mr. Una. So this is USD CHF on our screen right here. So USD CHF is on a downward trend. So if it's on a downward trend, the dollar is weak, is weak right now. So if it is weak, it simply means look here, man, and you know this thing is very steep. Whenever it's steep like this, it means the fall is a great fall, right? So if you watch carefully, you will see that if you watch carefully, you will see that it is even inside a channel, right? This is a channel. So this is a channel. So when you draw two lines like that in trading, you call it channel, right? So on this channel, we look out for sell opportunity, right? Sell opportunity. So let's look at 15 minutes time frame. So I want to say, so beginning of today too, it will have still been a sell opportunity. I'm telling you. Thank you for calling our attention to this one. This one is a very simple one. Huh? So sell of opportunity, guys. Sell of opportunity. So that means a sell placed around this area should have given profit already. So should I still jump into sell? No, I'll wait for the market to give me a retracement. So the market can actually offer another opportunities, right, for traders that will not carry it along. So the market is so kind, can offer another opportunity. But if you don't understand the market, it can be so brutal. But for now, it will be so kind. So it wait for a retracement upward. Now, anywhere around this area you want to sell. So it's a sell opportunity we are looking at for. Sell opportunity, guys. Sell opportunities. So for USD, CHF, we only want to sell. So if you sell, your stop loss should be just above these highs, right? Now, if you notice, the market is trading below the opening price of today. So, and the market trading below the opening price is a strong sell signal. It's a strong sell signal. The market trading below the opening price is a strong sell signal. So what do? You look out for opportunities only to sell. Opportunities only to sell. So when you sell, of course, your take profit should be, if this is your stop loss distance, your take profit will have to be ×2 of that, right? Minimum ×2. So if this is your stop loss, then this has to be your take profit. So when you continue to trade like this, at the end of the day, you get what we call net profit, right? Your profit will always be bigger than the stop losses. So that puts you in overall profit. So guys, from today also, opportunities to sell on USD CHF. So more of the questions there so that we can wrap it up. So you said we should check gold, right? So let me look for gold right now so that we can do analysis of it, okay? So gold right now so look carefully. Gold is on what kind of trend is this now? Guys, if you notice, we have broken this, we have violated this high. So we're on the downward trend, but we have violated that high to form a new high. It takes a lot of money and momentum and investors, right? Investors' money to violate a high. So that means enough money was pumped into gold to violate this high. So that means we are going up. We are going up. So if we are going up, we want to look out for buying opportunities. So buying opportunity. So this is usually the first sign. So we call this a change of character, right? Or a shift in market structure. So the market structure have shifted to the upside. So this is a push to the downside to violate this low to form a new low, right? So this is retracement to the upside, right? So this is movement again or another push to the downside. So we can use this one. Okay, let's use this one, right? So we can use this one. Then of course a retracement again to the upside. Look here, this is a retracement to the upside. This is another push again to the downside. You can see it. So we can say the market was on a downward trend before we got this shift, right? So it gave us what we call relatively equal highs, which is always a magnet, a trap for the trade. So the market came back again to smash through this relatively equal highs to form a new high. So we look out for buying opportunity. So you can see how we're able to analyze to this point that, hey, it's buying opportunity we are looking at for. So since it's buying opportunity, where is the support? That's the next question. So this is a support. So a much lower time frame, 15 minutes time frame, you should be able to see more levels of support. So this is one area, one level of support. So where you can stack your trade, and this also is another level of support. So guys, these two levels of support, once the market retraces to that level, please, you want to buy, you want to buy, you want to buy. So for gold, our analysis is an upward trend, so you want to buy. So guys, this is already 5 minutes past 9. I would like to draw the curtain here. My number is 090. So if you want to reach me, you want to call me, you want to get more analysis, want to ask questions, zero 262645. I think I can actually drop it here. 09026264507. So my name is Emmanuel Odugu. So guys, thank you very much for joining us again. So join us tomorrow for another exciting session again. Please do well to chat me up or call me if you have challenges. Also do well to fund your account, top up your account so that you can trade larger sizes and of course do well. Thank you very much, guys. I'm signing up for now. Bye for now.